And welcome to today's edition of the London Session Open, also called 600 Seconds of Trading. Why 600 seconds? Well, because in the next 10 minutes, I'm going to provide you guys with a quick overview of the Euro Dollar, Bitcoin, gold, crude oil, and the DAX 30. We'll also talk a bit about other markets as well, as we have been doing lately. And today we're going to start out actually by talking a little bit about sort of general market themes that are influencing the markets right now. But before we do any of that, as always, I need to stress that trading financial markets unfortunately is high risk, and we may lose all of our invested money. And we have Yasin and Selena with us this morning. Hi to you. We have Hi as well, and we have Juan as well. So good morning to you guys, and thank you so much for joining me this morning. If anybody's new to this presentation, don't forget to follow us on Twitter at AlexFX00, and of course to come back to this page on Trade Captain Monday to Friday at 9 a.m. London time. Okay, let's begin. And I just want to start to talk about something that I realized this early morning. The markets right now are behaving the way I would have expected them to behave in mid-July and definitely August. In other words, the markets are a bit stuck, and in particular the euro, which has been trading sideways between the June low and this July high for quite some time actually. Well, since June, actually since June pretty much we've been trading sideways. What's also interesting is that you have something like the S&P 500, and obviously it's moving to the upside, and it did manage to bottom out here, and we do have a trend here without a doubt. I traded stock markets quite a bit this year because they have a one nice directional move, but it's not a very fast trend. Things are not moving too fast. And then finally, even emerging markets, so this is the Turkish lira. I was actually long trying to buy, I think it was here on the breakout, but I was stopped out in July, and then you had that big push. But since pretty much 31st of August, the Turkish lira has been gaining a bit, but there's not too much activity. Looking at Mexican peso, you had that big decline, but then August, September, again a bit, not too much action. Gold markets, unfortunately as well, a bit choppy. And there was some action in emerging markets. I was actually long the South African stock market, and I got stopped out at break even. See if I can find it. So it's South African stock market. We had that nice breakout. I was long, and I was in a very nice profit for a few days, and then I kept it because I thought we were going to go to the upside. Fortunately, got me stopped out at break even. Then I tried to go long again, and then I lost a bit. I think maybe 1% or something like that. And then I said, okay, so people don't want to buy emerging markets; they want to sell stocks. So I sold the Spanish stock market, which is, let's see, is this one here. So I sold it here and had a nice little profit for a few days, and then look now, back up again. And yesterday I got stopped out of break even. So the market is not really, there's just a strong theme, of course, emerging markets, but most of us, we don't trade the Indian rupee, we don't trade the Indonesian rupee, we don't trade the Argentinian peso, and sometimes we trade Turkish lira. And what's interesting here though is just that, okay, you had that big move in the last, say, 4 weeks, but otherwise these other markets like the S&P, like the euro, they're not doing too much. And I did try to buy the South African stock market. I was long for a bit. That worked out fine for a few days, and now that did not work out. So I said, okay, let's try to short instead. So I short the Spanish stock market, and that worked out for a few days. But then I was stopped out of break even. And what is interesting here that it's difficult making money being long and then trying to be short. And that's an indication for me that we're dealing with sideways markets, and that right now we don't have a particular market that is moving really strongly, because it's not gold, it's not the euro, it's not stock markets. And when that happens, using a system like the one I use, which is a trend following system, doesn't work that very well. And what really works better at these times is range bound systems, which is buy the low, sell in the middle, sell the high, book profits in the middle. So looking to make money from ranges. And that's something that I actively don't trade. When I see something like this one, like in the euro, I actually just ignore the market fully, and I'll just gonna wait for a breakout. And that is still what I'm doing here. In the euro, if we trade below the June low, I'll turn bearish, and I think this market could go to the downside. On the other hand, take out the July 31st high, and I think it's time to prepare ourselves for a corrective move to maybe 120. But in here, in the middle, it's really difficult to do anything. And there's two ways of looking at this. I came to the realization this morning that things have not been that easy over the last 2-3 weeks. So I'm gonna take a step back, trade a little bit less, just look for very good quality setups. On the other hand, if you really enjoy these sort of market and it's working out good, then continue to do so. And remember, try to understand when your system works, under which markets they work. Because if you're making a lot of money in the euro right now, then you're using a range bound system, and which means that you would be probably foolish to use the same system when the market breaks, and you would actively look for markets that look very similar to the euro, which are range bound. And it's not always like this, but most systems go into what we call mean reverting, so range bound systems, or trend following, which is the way I use. Breakout, trend following, pretty much the same thing. Now, so this is my outlook for the euro today, which is the same I've been sharing with you over the last few days. Bearish on a break to the downside, bullish on a push to the upside. Here's the pound, which we have been talking about lately, and I said we could probably buy it here on dips. As you might remember, I was bearish, and we can buy it on dips. I do have my reservations with this, and the fact is that there's quite a lot of overhead resistance here, and it's usually not easy to trade the beginning of a trend, because if you look at it from a daily chart, then this is just a correction. We're still dealing with a downtrend, and there are better markets to work with. As an example, I shared a euro pound outlook on my Twitter and on Trade Captain over the last few days. And then I think it was on Monday or Tuesday we talked about the pound New Zealand dollar, where you had some momentum as well. So euro sideways, pound moving to the upside. Dollar yen, something is brewing, something is building in this market, and you could have a break to 111.85. That could lift you to the upside. We have seen the US 10-year yield, so interest rates moving higher in the US because of the good wage growth we had from the non-farm payrolls last Friday. And stock markets, they're moving slightly higher, but we're not really seeing that priced into the dollar yen. It could be, if we take out 111.85, that we could push to the upside. So this is something to pay attention to. But again, here's the market. It hasn't done nothing really since July 24th. That's when the market reached these levels, and since then it's just been trending sideways. While we're at it, let's talk a bit about the Australian dollar. So the big theme and the big move yesterday was on the back of news published by Dow Jones, that the US is ready for a second round of talks. As far as I understand, they had a round of talks that ended, I think, 2 days ago, and that did not result into nothing. And then 2 days ago as well, the Chinese were pushing for, were asking permission from the World Trade Organization to impose sanctions on the US related to some issues they had from 2013. So things have not been going in the right direction for in these negotiations. And now the US is actively reaching out to the Chinese. Now, it's unlikely, though, people say that because of midterm election that Donald Trump will change his rhetoric. He will probably go into the midterms saying that we're tough against the Chinese, we're tough against this is what we've done, the economy is doing really, really strong. So it's unlikely that a very nice deal is going to be created before the midterms. That's what people say, and I guess it makes some sense. Now, the effects on this, because it was just a headline, was that the Aussie dollar moved substantially higher. And I was actually short, and I got out here for a loss. I think it was, I had it here, but not anymore. But I don't remember actually exactly how much it was. I think it was 0.5% or 0.7%. The market pushed above my stop levels, and now we're challenging 72.12. If you look at this from a daily time frame, there's nothing really changed here. We're still dealing with this downtrend. So I am comfortably bearish here, but I'm not shorting this anymore. Rather, I'm going to look for something else to trade. And it's difficult to say if this move we're seeing is going to change things. If anything, I'm not sure actually it will do. I think something else is going to happen, and this is going to trade to the downside. But and the trend remains bearish. Now let's take a look at gold. So this is gold, and gold yesterday did trade above the 1207 level, which was the level I was focusing on. And that, if one was bearish, there's not too much to do about it except accepting the loss and looking to do something different, maybe go the other way, or just trade something totally different. Here, if I look at gold today, we did push higher yesterday, but it wasn't enough to trigger stop loss orders just above here. And today, I'm focusing on 1209, which is a level just above yesterday's high. I suspect that if we push to the upside, we would definitely have left this series of lower and lower highs, and we would have created a new higher high here. And then I think this might go a little bit higher. Now, if we treat this as a head left, and this would be some sort of a right shoulder, and we connect it with a neckline like this, and then this was a failed head and shoulders pattern, and the difference between the neckline and the head, which is usually the target we project like this, could now be on post here on the right shoulder, and that projects the target to 1235. Now, is it going to be an easy ride to the upside? Probably not. Why? Because we're dealing with a very, very strong downtrend, and the macro fundamentals themselves suggest lower prices. But if you're scalping and if you know what you're doing, then I would choose to be bullish on a break to 1209, and I think we could probably go to 1210, maybe 1225, and maybe all the way up to 1235. On the other hand, if you say, I don't believe it's going to go to the upside, I do think that the dollar is going to come back strongly in the next few days, then just look for a break to 1187. Take that out, then that will be a nice clean break to this corrective move and a resumption of the big picture. It will be a nice move like this, because this is we're in this sort of corrective phase, right? But the big picture is obviously clearly bearish. But when and if we take out this level, the short-term trend will now be aligned with the big picture. In these sections here is when things go really quickly. On the other hand, when you fight the trend, that's when things go slowly, like it's doing right now. Okay, crude oil. So I usually focus on West Texas, and let's focus on West Texas, but we'll also talk a bit about Brent. So this is West Texas, and the market is just trading sideways, really. It's in this triangle, another sign really that there's not much action happen in the market. And the market almost moved to the upside. Now this is interesting. You have a double top here, high here, which means that next time we trade above these levels, there's no doubt about it. Most likely this is going to be some sort of a bullish breakout. And I guess the market could head to the upside, do something like this when and if that happens. Until that happens, this market is going to the downside, and it could technically just travel all the way down to 64.46 until we have some sort of a break. Now what is interesting is this, which is Brent crude, and this is a daily chart. And yesterday we talked about it as well, and I said that if you look at it from a weekly time frame, you have a head here from January 2015, and you have a left right shoulder head here. This was the bullish breakout, and this pattern suggests we could move upwards to should move upwards with about $35. You see here 35. That gives us a target of 90, and this without, of course it had these corrective phases, so this wasn't necessarily easy, but on a break to 80.49, it could mark the resumption of that move. So this could be something to keep an eye on. We just need to push above it. If you're really super convinced that we're going to head to the upside, then I think these traders, they're probably focusing on this low down here, which is the 75.20 62 level, and then they're probably using some fib or something like that, and they might look to get involved on a corrective phase, maybe corrective move, maybe down here or something like that. All right, German DAX, it's doing very good today, and reminds me, well, it is much like the Spanish stock market, which had a break to the downside. We moved lower, we moved up, moved like this, and obviously if you shorted here, you would have your stop loss pretty much above the September 6 high. So you would have been stopped out of break even, the same way as I was stopped out of from the Spanish stock market at break even yesterday. Now the way this looks like right now, it looks like it will most likely push above that level, and the market is probably going to push deeper into the pattern, and then we'll see what happens here afterwards. If it just goes up and then down, then we can probably work with the pattern on the sell side, but right now it looks like it's just going to head to the upside. In the case of the S&P, I did a little update on this yesterday, put that on Trade Captain and as well on my Twitter. And as you know, I was tracking this like this, and a simple fib suggested that maybe a 50% correction was enough, and we did spike to that level. And I think if we would spike to that level again, I think traders are going to buy again, and they're going to be short-term bullish above 28.65. So I think down and then potentially up again. Okay, let's finish with the crypto markets. So Bitcoin holding up relatively well right now, and there's not too much to do. Maybe you'll bottom out here, I'm not sure. Definitely having a contraction of volatility, and I think this will continue for longer, so I'm not really that interested to trade this market at all right now. Obviously if it stabilizes above here, go a little bit higher, but don't be married. I mean, I see that the people, it happens all the time. Like, don't be stuck just trading cryptos if that's what you're trading. I think there is an idea that is being spread, and it's been around for as long as I know, You have people that say, well, I'm a DAX trader, and the only thing they do is trade the DAX. I met a guy, a professional manager, and he is primarily a FTSE 100 trader. And yes, it's perfectly fine to be an expert on one market. And again, if you're making money doing that, then yeah, go ahead and continue to do that. But if it's been 6 months or so and you're really struggling, well, maybe try something different. Why? Because every market has different phases. It has, if we can divide it into 3 different phases: bullish trend, bearish trend, sideways market. But say stock markets, the volatility is different on an uptrend and in a downtrend. And then you have an aggressive uptrend, an aggressive downtrend, you have a moderate uptrend, moderate downtrend. And then you have consolidating. So you have, from those perspectives, suddenly you have 5 different market types. So you see, you need to understand all of them. I've been doing this since 2006, and I still don't understand how to trade range bounds markets really well. So I made a decision. I'm just going to trade breakouts, or I'm just going to trade trends. That's actually what I did. Why? Because their books and history, if you look through history of financial speculation, there's always been trends. Even from the Roman Empire, there's been trends up until now. And I'm guessing trends will continue. Bitcoin is a good example of a bubble and a trend that happened just up until Christmas. So this will continue for another 30-40 years, if not more. Which again sort of tells me that it's the right path of trading. So there's not much happening here. In fact, there's not much happening across many other markets either. But if you continue to sort of focus exclusively on this, and you don't know how to trade these range-bound markets, then you're just going to have the same results you had lately. On the other hand, if you trade trends like I did, then you made 124% return by the last year, if not more, because you traded that move to the upside. And then this year you should be up with about 50% like I am. But it wasn't because of cryptos, it's because stock markets have been moving very well, and because I shorted metals and New Zealand dollars, Swiss franc, and many different things. So that's something to think about. Okay, we're gonna wrap things up. I think we're gonna finalize or end the presentation now. It's always good to see so many of you guys here. We have Yasin and Salina. We have Juan and Maurizio Oliveri today as well. I think we have various countries represented as well. I think we have Italy, Singapore, I think it is, and then we have the Netherlands and Yasin. I don't really know exactly where you guys are based. And then I'm quite sure we have much more people here that are watching the live presentation of the recording, but that are not in the chat. Anyhow, I want to thank you all for joining. I want to also ask you for a bit of help to like the video. Just click on it and load it on YouTube, and then you just hit that like button. Very straightforward like this. And the best thing you can do as well is to keep track of us on Twitter. So my Twitter is AlexFX00, and the Trade Captain one is TradeCPT. It's good to follow. And the best thing as well you can do if you like it, obviously we do all of this for free, but it would be nice as well if you could retweet, like our stuff. Why? Because the website is just 1 year old. So we need any help. We need all the help we can get to promote it and spread the word about this website. Okay, have a good day, guys. Thanks so much for joining, and I'll see you guys tomorrow. Thanks.